Welcome to the Deep Dive. Today we're jumping into the global corporate wellness solutions market.
That's right. We're talking about everything from EAPs and mental health support to gym memberships, financial wellness, the whole package, really.
Exactly. And we've got some fascinating data here from cognitive market research. We're going to unpack the sales figures, look at the trends, projections, see where things are really heating up globally and down to the country level. Okay, let's get into it. We want to look at the raw numbers, see what's driving this market.
Let's do it.
So starting with a big global overview, this market is definitely on the move. Back in 2021, global sales were sitting at $54.153 billion.
A pretty substantial base already.
Right, and is projected to climb to $75.59 billion by 2025. But then, look out to 2033, a massive $147.279 billion projected.
Wow.
Yeah, and that works out to a compound annual growth rate, the CAGR, of 8.695%. It's pretty impressive growth year over year.
It really is. And what's fascinating there, I think, is just the sheer scale globally. It tells you this isn't just a trend in one or two places. It suggests, a real universal shift in how employers are thinking about investing in their people.
Absolutely. It's moving beyond just a perk.
Exactly. More like a strategic necessity now.
Okay, so that's the global scene. But let's break it down regionally to see where the action is, starting with North America.
Makes sense. Always a big player.
Yeah, definitely. So North America in 2021, the market was $18.737 billion. That's expected to grow to $25.771 billion by 2025, and then looking out to 2033, $48.749 billion.
Still huge growth.
It is. The CAGR there is 8.294%. Now, within that, the U.S. is, well, the giant. It went from $16.47 billion in 2021, projected to hit $41.681 billion by 2033. That's an 8.045% CAGR.
Right. Dominates the region in terms of size.
But here's something interesting. Look at Canada. Started smaller, $1.78 billion in 2021.
Okay.
But projected to reach $6.045 billion by 2033. The CAGR, a really strong 10.725%.
Oh, wow. That's significantly higher than the U.S. growth rate.
It is. And then Mexico, more modest, but still growing steadily. $487 million in 2021, up to $1.024 billion by 2033, with a 5.827% AGR.
That Canadian figure really stands out, doesn't it? You have to wonder what's driving that faster acceleration compared to the U.S. Maybe different policy approaches. Or perhaps a faster adoption curve for certain types of wellness programs up there.
Could be. Maybe more focus on mental health earlier on. It's definitely something to watch. Okay, so from North America, let's hop over to Europe, another major market, of course, but lots of different economies there.
Very diverse. Yeah, let's see how it plays out.
So Europe's total market value in 2021 was $16.029 billion. That's projected to grow to $41.238 billion by 2033. The CAGR is pretty similar to North America, actually, at 8.193%.
Okay, solid, consistent growth then.
Yeah, very much so. And looking at some key countries, Germany, for example, $3.03 billion in 2021, projected to hit $7.629 billion by 2033. That's an 8% CAGR. France started at $2.356 billion, going up to $6.186 billion. Their CAGR is slightly higher, 8.375%.
Okay.
Italy is also strong. $1.731 billion up to $4.742 billion, with an 8.761% CAGR.
Quite healthy.
And then you've got Russia, $1.603 billion, moving to $4.61 billion as a 9.219% CAGR. And Spain, too, nice growth, $1.234 billion up to $3.505 billion, a 9.088% CAGR.
It's interesting how healthy and kind of widespread that growth is across Europe. Despite all the different economic conditions and, healthcare systems, there's clearly a shared momentum towards corporate wellness.
It really seems embedded now across the major economies there.
Yeah, suggests a broad acceptance of its value, perhaps also influenced by things like EU-wide discussions on worker well-being, maybe even data privacy rules shaping the digital side of it.
That's a good point about the regulatory landscape.
Yeah.
Okay, so we've seen North America and Europe both strong, steady growers. Now let's turn to Asia Pacific. This region looks like a real growth engine.
Yeah, the numbers coming out of APAC often look quite dynamic.
They really do. So 2021, the market was $12.076 billion. But the projection for 2033 is $36.157 billion. Look at that CAGR, 9.569%. That's higher than the global average.
Definitely leading the charge in terms of growth rate.
And within APAC, China is the largest market. Started at $3.671 billion, projected to reach $10.594 billion by 2033. That's a 9.233% CAGR.
Significant market.
Japan, also big, $2.331 billion up to $6.472 billion with an 8.884% CAGR. But now, India. This is where it gets really interesting.
Okay.
Started at $1.908 billion in 2021, projected to surge to $6.978 billion by 2033. And the CAGR here is, well, remarkable. It's the highest we've seen in the data, for $954 million to $3.001 billion, a 10.021% CAGR. And Singapore, similar story, $725 million up to $2.296 billion, CAGR of 10.088%.
So Asia-Pacific isn't just growing fast overall, but you've got these pockets like India, Australia, Singapore with double-digit CAGRs. That's impressive.
It really paints a picture of rapid adoption.
Yeah, and thinking about India specifically, with that incredible 11.4%, you have to assume there's a perfect storm, perhaps, a huge young workforce, rapid digitalization, maybe increasing awareness around mental health in those fast-growing tech sectors.
And possibly government nudges or corporate responsibility trends playing a role too.
Exactly. It suggests a fundamental shift in how Indian companies are viewing, their human capital investment. It's clearly becoming a major focus.
It definitely seems like Asia-Pacific, and India in particular, is a region to watch very closely.
No question about it.
All right, so finally, let's look at the other regions, grouping together South America, the Middle East, and Africa, often called emerging markets in this space.
Right, sometimes starting from a smaller base, but often with really interesting growth dynamics.
Exactly. So South America, the total market was $2.762 billion in 2021, projected to hit $8.469 billion by 2033. That's a strong CAGR of 9.787%.
Almost hitting that double-digit mark for the whole region.
Yeah. And within that, look at Argentina at 10.376% CAGR. And Colombia, even higher at 10.383%.
Wow, so real hotspots of growth there, too.
Definitely. Now, the Middle East started at $2.329 billion in 2021, expected to reach $6.922 billion by 2033. The NAGR there is 9.504%.
Also very strong growth.
And the UAE is a particular standout, showing a 10.622% CAGR.
Okay, yeah, you can see that fitting with the drive to attract international talent and build modern economies there.
Makes sense. And finally, Africa. The market was $2.22 billion in 2021, projected to grow to $5.744 billion by 2033. The CAGR here is 8.06%.
Still solid growth, though maybe slightly less explosive than parts of South America or the Middle East.
Right, and the report mentions Nigeria and South Africa as being the largest markets within the continent.
So even across these really diverse regions, South America, Middle East, Africa, different economies, different starting points, you see this consistent theme. Significant investment and growth in corporate wellness. It really reinforces that global trend we saw earlier.
It does. It's spreading everywhere.
It raises that question, doesn't it? What are the common drivers making this such a global phenomenon across such varied economic landscapes? It seems the basic idea, healthier, happier employees are better employees, is taking root universally.
So we've gone around the globe, looked at the big picture, drilled down into regions and countries. We've seen the numbers, the projections, the TGRs everywhere. What's the big takeaway for you, for the listener?
Well, I think the biggest takeaway is just the sheer undeniable momentum. This isn't a maybe or a niche trend anymore. The data is crystal clear. Employers worldwide are significantly ramping up their investment in the health and well-being of their workforce.
It's going mainstream.
Completely. We're also about a booming global market. It signals a fundamental recognition that employee wellness isn't just, a soft benefit. It's tied directly to productivity, to retention, to the core success of the business.
So summing it all up, this corporate wellness solutions market is in a period of massive global expansion. The numbers really do speak for themselves.
Absolutely. A true global phenomenon unfolding.
And maybe that leaves us, and you listening, with a final thought to chew on. What does this huge global shift towards prioritizing employee wellness really tell us about the future of work itself?
Good question.
How might it change employee expectations, or what we even consider corporate responsibility in the years ahead? And, what specific kinds of wellness programs are actually behind these staggering numbers? That's maybe a topic for another day.
Definitely more to unpack there.
And just a reminder, all the data we dove into today comes courtesy of Cognitive Market Research.
Welcome to the Deep Dive. Today, we're really plunging into something pretty significant happening in the corporate world. It's about how companies are thinking about, employee health and well-being. This whole area, these corporate wellness solutions, it's evolving so fast. Our plan today, cut through the noise, giving the real nuggets, will unpack what's driving this massive shift, the benefits, which are surprisingly broad, and the real hurdles companies hit, plus the cutting-edge trends shaping what's next for employee well-being. So, okay, where do we start? Why now? What's the core thing pushing businesses towards this?
Yeah, it's interesting how things are coming together. You've got, on one hand, much higher health awareness among employees themselves, but at the same time, we're seeing this, well, worrying increase in lifestyle stuff, obesity, diabetes, stress. And the key thing our sources point to is that companies are getting proactive. They're investing in wellness platforms before things get bad.
Right, so it's not just reactive.
Exactly. They're trying to tackle rising healthcare costs head on and boost productivity too.
Mm.
The benefits are actually pretty concrete when you look at it.
Yeah.
Less time off sick, better morale, and actual long-term savings for the company.
Okay.
It's a direct response to, well, bottom line pressure.
So it sounds like more than just physical health or saving money, though. Is there like a deeper shift in how companies see their people, a philosophical thing maybe?
Oh, absolutely. Yeah.
Yeah.
Beyond the financials, there's this clear move towards more employee-centric cultures. Businesses today really get that investing in well-being isn't just, a nice perk.
Yeah.
It genuinely leads to higher engagement, keeping people around longer, better job satisfaction overall.
Right.
And our sources really highlight how these wellness programs are becoming like core HR strategy now. We're talking mental health support, fitness challenges, nutrition coaching, kind of holistic stuff,
Okay.
all aimed at boosting both the individual and the company's performance.
Oh, okay.
It's seeing people as a, well, strategic investment.
That makes a lot of sense. But okay, what about how we actually work now? So many teams are spread out, remote, hybrid. How do companies handle wellness across that kind of setup? Seems tricky.
That's actually another huge driver, the whole remote and hybrid work explosion. It's basically pushed organizations towards digital wellness tools. They have to use them to reach and engage teams everywhere.
Ah, okay. So technology's bridging the gap.
Pretty much. Think about it. Mobile apps for teletherapy, virtual yoga classes, stress management tools you access on your phone. These aren't just nice-to-haves anymore. They're essential for building resilience, supporting emotional well-being when your team isn't physically together.
Right. They keep people connected in a different way.
Exactly. They bridge that distance.
Okay, so the why seems clear. Benefits sound great. But like you said, it's not always smooth sailing, is it? What are the real roadblocks? What makes companies stumble when they try to roll these programs out?
You've hit a key point there. One thing that keeps coming up in our sources is proving the ROI, the return on investment. And linked to that, you often see pretty variable participation rates.
Ah, so people don't always jump in.
Well, yeah. Everyone agrees there are long-term health benefits, right? But quantifying the direct financial gain, especially short-term, is tough for many companies. And the paradox is, even with fantastic programs, if participation is voluntary and it stays low, that limits the impact. And then stakeholders start questioning the investment. It can be a bit of a chicken and egg situation sometimes.
And I guess cost must be a biggie too, especially for, smaller companies without huge budgets.
Oh, definitely. It's a major barrier. These comprehensive platforms, they can involve a pretty significant upfront cost. You've got onboarding, customization, tools to keep people engaged, maybe incentives.
Right.
It adds up. And that's particularly tough for small and medium-sized businesses, SMEs. Honestly, without some kind of external help, maybe from government or insurers, these really robust programs can just be out of reach for a lot of them.
That raises another critical point. A lot of this involves personal health data, doesn't it? How are companies dealing with the whole privacy minefield?
Yeah, privacy is a really pressing concern. It's a very delicate balance. I mean, these wellness solutions, they work by collecting sensitive health info. And that immediately brings up big questions: employee trust, data security, and of course, regulations. You've got things like high pay in the US, GDPR in Europe, very strict rules.
Right, compliance must be complex.
It is. And even if a company is fully compliant, employees might still hesitate to share really personal health details.
And that hesitation could undermine the whole program.
It absolutely can. It can reduce how effective the program is overall. It's a constant tightrope walk, really.
Okay, so despite those challenges, those restraints, our sources show some really powerful trends pushing things forward. What's actually driving the evolution now? What are the big shifts happening?
Well, one really standout trend is how central mental health has become. It's moved way beyond just being an add-on. Now it's often a core part of the wellness offering.
Okay.
Right.
So more than just like gym memberships.
Oh, much more. We're seeing a huge increase in stress management, mental wellness tools, things like mindfulness training, resilience coaching, digital therapy sessions. It's about prioritizing emotional well-being just as much as physical health, maybe even more sometimes.
Right.
There's a recognition you really can't separate the two.
And thinking back to that participation problem you mentioned, how are companies tackling that? Are there like clever ways to get people more involved?
They are, yeah. And that leads right into another key trend, gamification and using incentives.
Gamification, like leaderboards and points.
Exactly that kind of thing.
Yeah.
Fitness leaderboards, reward points for hitting certain goals, team wellness challenges. These features are used specifically to boost engagement, make it feel less like a chore, more interactive, maybe even fun.
Uh-huh.
It encourages a bit of friendly competition, helps build consistent habits, and it can actually strengthen team bonds too through those shared goals.
Making healthy living sticky, as you said.
Yeah, that's a good way to put it.
So if we zoom out a bit, it feels like everything's getting more personalized these days. Shopping, entertainment, you name it. Is that happening in corporate wellness too? Are we moving past the sort of one-size-fits-all approach?
Absolutely. And that's a massive leap forward, really driven by technology, especially AI. We're seeing this big surge in AI-powered personalized wellness plans.
Yeah, okay. How does that work?
Well, these AI platforms can analyze tons of data health metrics, lifestyle info someone inputs, their personal goals, and then they generate these tailored wellness journeys for each individual employee.
Wow. So like a unique plan for everyone.
Pretty much. Imagine a fitness plan that adapts as you get fitter, or nutrition advice tailored to your specific needs, or maybe mental wellness check-ins focused on your stress triggers.
That sounds much more useful.
That's the idea. That level of personalization aims to make the program much more relevant to the individual and, crucially, more effective in the long run.
What a journey we've taken. That was a real deep dive. We've gone from the why behind corporate wellness, the big drivers, all the way through the challenges, and now these really innovative trends reshaping it all. It's definitely a dynamic space, complex, but clearly super important for today's workforce.
And the outlook is strong.
Mhm.
As the global workforce keeps changing, this market for wellness solutions is really set to grow scale and sophistication. You've got this convergence happening.
Mhm.
Digital health tech, AI, plus that employee-first mindset means companies that really invest in this holistic way. They're likely going to see the payoff, healthier people, more productive, and ultimately a more resilient workforce.
That's a powerful final thought. So for you listening, maybe think about what stood out to you, what seemed like the biggest game changer. Or maybe the trickiest challenge that still needs solving in corporate wellness. Something to mull over as these trends keep playing out.